Hello and welcome to Global Lens. Over the next 30 minutes, we put the spotlight on all the top stories from around the world. I'm Parikshit Luthra. These are the top global headlines we're starting with today. The trade negotiations between India and the United States are at a sensitive stage, say government sources. The Indian delegation has extended its stay in Washington, D.C. by 3 days till today. If the talks fail, 26% additional tariff on India are imminent. U.S. Senate advances President Trump's spending bill by a slim margin. The latest version of the bill reduces the tax on remittances to 1%, but the bill stuns the clean energy industry with a new tax on wind and solar projects. Israel continues deadly attacks on Gaza ahead of potential White House talks on a ceasefire. This week, Israeli airstrikes and gunfire kill at least 38 people overnight. Let's go straight to the market action. S&P 500 and Nasdaq hit yet another record high amid optimism over trade deals. The indices had closed at an all-time high on Friday. Now here's how the Asian markets ended today. Indian benchmark indices snapped a 4-day winning streak. Sensex lost over 450 points and the Nifty lost 120 points. Japan's Nikkei, South Korea's Kospi and China's Shanghai Composite surged in trade, while Hong Kong's Hang Seng ended in the red. European stocks edged slightly lower. After a ceasefire between Iran and Israel, the attention of traders has shifted to U.S. international trade relations and economy. This week, investors are expecting to focus on crucial data, including the employment data that is due on Thursday. This data will play a role in U.S. Federal Reserve's interest path ahead. As per a Reuters poll, U.S. employment is expected to have climbed by 110,000 jobs in June as against 139,000 in May. Among other data, markets will watch U.S. trade deficit data for May as well as manufacturing activity. Investors will also be keeping an eye on whether the Senate will be able to pass President Donald Trump's One Big Beautiful bill. Today's Wall Street rally follows Canada's cancellation of the digital services tax that targeted American tech companies like Google, Meta and Amazon. Following the move, Prime Minister Mark Carney and U.S. President Donald Trump agreed to resume trade negotiations and reach a deal by July 21st. The implementation of the DST would have meant that digital services companies with a revenue of over $20 million a year in Canada would have had to pay a 3% tax. The Macquarie Group believes that Trump may extend the deadline and continue to negotiate if some small concessions are made between now and the 9th of July. But July 9 still stands out as a key risk. However, when asked if the July 9 deadline could be extended, President Trump remained ambivalent, saying he could defer the deadline or even shorten it. Listen in.
Is that July 9th date set for tariffs to snap back, or could there be a...
We can do whatever we want. We could extend it. We could make it shorter. I'd like to make it shorter. I'd like to just send letters out to everybody. Congratulations, you're paying 25%.
All right, to decode what's next for the U.S. markets, we're now joined by Thierry Wizman, financial markets economist at the Macquarie Group. Thank you very much for joining us, Thierry. We've seen a strong rebound in U.S. markets, but will this sustain?
Look, I think it will sustain if we get more progress with regard to deal making in the realm of international trade. This is not inconceivable, of course. We've already seen a few deals happen. We've seen the deal that the U.S. has done with the U.K. Last week, we saw completion, effectively, of the contours of the deal that the U.S. has done with China. Yes, it's true that July 9th stands out as a critical date because that is 90 days past the period of reprieve that President Trump gave us in April. But nonetheless, as I keep saying, I do think that it's possible that that date will be extended as long as all parties are negotiating in good faith. And as long as the market seems to think that the worst case situations coming out of the Liberation Day reciprocal tariffs are not going to prevail, and that we will see de minimis reciprocal tariffs on at least most of the U.S.'s trade partners, I do think that stocks can continue to rally. One of the reasons that stocks in the U.S. can continue to rally is because the dollar is weak and has stayed weak despite the rally in stocks and the rally in other risky assets over the past 2 months. The fact that the U.S. dollar is weak is going to help operating margins for many of the companies in the U.S. indexes that sell product abroad, including the technology companies. And I think this is one part or one aspect of the oxygen that the market is benefiting from right now.
Right. How do you see the US dollar depreciation over a long term? How should investors see it?
Well, this is all going to depend ultimately on a few things, but I think the most paramount things are first, that the US dollar is expensive from a broad, long term historical perspective. It may be as much as 30% overvalued in real terms still. That's the first thing. So, the other thing, of course, is that investors themselves, foreign investors, global asset allocators, are probably overweight not just the dollar, but US assets as well. And so, to the extent that they recognize that the dollar is expensive, to the extent that they recognize that US assets are currently much richer than assets abroad, we will see a rotation over time out of the US dollar and into foreign assets as part of a broad rebalancing. This will happen on the part of private investors. Of course, it could also happen on the part of international reserve managers. But as this happens, and presumably takes place over the next few years, you will see the dollar decline. It can decline relative to the Canadian dollar. It can decline relative to the euro, to the Japanese yen, to the Korean won, even against some of the more, less important currencies like the Norwegian krone. But we do see this as a general trend. We've seen over history that when the U.S. enters a depreciating trend, these are multi-year These are multi-year events. They don't last for a matter of weeks. They last for a matter of years.
Right. I'd also like to ask you about the possibility of a rate cut. The sentiment is high in terms of the commentary by the Fed. There is now a sentiment which says that there is at least a 20.7% chance of a rate cut in July compared to 14.5% earlier. In your analysis and reading of the market, what are the scenarios that you're factoring in?
Well, I'm factoring in really just two things. First of all, is the Fed going to feel comfortable that it has gotten enough data on U.S. inflation to reflect the impact or the impulse coming from tariffs? Of course, if they deduce that that impulse or that impact is small and not durable, they may very well decide to cut. The other thing that is prevailing on the Fed is just the direction of the economy generally in the U.S. Is it strong or is it weak? I tend to view it as weakening. Certainly, we've gotten a lot of forward indicators of the labor market that suggest that we are seeing a weakening there, slower hiring, lower quit rates, and intentions to hire weakening as well. So is this all going to prevail on the Fed in a way that's going to make them cut in July? I don't think so. It's probably still early. We still probably will not have seen enough evidence of whether or not tariffs are affecting inflation. But certainly by September, based on what Chair Jay Powell has already said, we may have seen a lot more evidence that will allow the Fed to move if in fact the direction is to cut. So I think it's more of a September event, not a July event. It doesn't mean that it will be followed by several rate cuts. It may be followed by only one more this year. But certainly September feels like the focal point or the focal time and place where the Fed will be willing to cut again, right, if the data is conducive to that.
What impact do you think the big, beautiful tax bill is going to have on the market sentiment, considering it's going to add $3.3 trillion in U.S. deficit over the next decade?
Well, look, there's already quite a lot of dejection in the U.S. around the direction of fiscal policy in the U.S. and what it implies for the debt to GDP ratio and the prospect that we're going to see deficits as a share of GDP around 5% indefinitely. The mood in that regard is already bad. The mood in that regard has already subsumed the prospect that it's going to be very difficult to get out of this debt and deficit trap unless we find ways to grow the economy aggressively, because certainly Congress, through tax policy and through spending policy, is not pulling their weight to try to get the deficit down and to get the debt to GDP ratio stabilized. So right now, the market is still counting on growth to bail out the U.S. from its debt problem. Is that going to happen? Look, there are some signs that productivity is increasing. certainly by way of the technologies that are being introduced into the U.S. I think right now the market is still holding out hope that productivity gains and growth will bail out the U.S. and the U.S. will not have to resort on inflation to effectively reduce the debt burden.
Right. If I were to ask you, how broad-based is this rally across companies in the United States? Is it limited to a certain kind or a certain section of the companies? Do you see this broad-based? Because what we also hear is that the uncertainty is impacting the capex plans of companies in the United States. So does this stock market rally mirror the sentiment, the investor sentiment within these companies?
That's a great point. Remember, earlier I alluded to some of the forward indicators of the labor market suggesting that companies are less willing to hire on a forward basis. You're exactly right to point out other survey evidence, or survey-based evidence, like companies' willingness to invest. That has been weak too. But we think that has been weak in part because of all of the policy uncertainty around the U.S., whereas in the case of hiring and employment, it has a lot more to do with technological innovation and prospectively also a weak consumer putting somewhat downward pressure on firms that sell to the U.S. consumer. So there are really two different things happening here. Having said that, you're absolutely right in pointing out that the stock market seems to be moving in a direction that's at variance to the sentiment, including the sentiment of the large company, of executives at large companies in the U.S. The mood in the U.S. among businesses and consumers is a lot worse than one would infer if one only was looking at the stock market.
Right. And finally, any cues that you would be watching out for, apart from the jobs data, the payroll data?
Well, I certainly want to see if there's progress on these trade talks. Now, I know that there's a possibility we may not see any, and at the same time, it won't be registering as bad news because we'll get extensions or further waivers or an extension of the negotiating periods from the U.S. administration. That's certainly something I'm watching. Again, the critical date is July 9th. I think as we approach that date, there may be some market nervousness if we don't see the culmination or the conclusion of some of these trade deals. The other thing I'm watching, of course, is the signal that the Fed is going to issue at its next meeting as well. Are we going to get confirmation from the FOMC that the Fed is moving towards, a little incrementally, towards a rate cut? I think that we already saw that, by the way. I think we already saw that implicitly in the last Fed decision with the dots and with the presser that Jay Powell issued after the decision. But we want to see a little bit more incrementally in July that they're moving towards the rate cut. So we'll be watching that as well.
All right. Thierry, thank you so much for joining us. We appreciate the fact that you joined us and gave us a roundup of the U.S. markets and what you're expecting in the days to come.
My pleasure.
Let's move on. A trade deal between the UK and the United States that give a preferential tariff rate to British cars imported to America has kicked in. It will allow UK motor manufacturers to sell up to 100,000 vehicles to the US at a tariff of 10%. The deal also removes tariffs on UK's aerospace sector in return. No tariffs will apply on beef and ethanol imports from the US. However, UK steel and aluminium remain subject to a 25% tariff. This could double if the two countries don't reach a deal before the 9th of July. Firefighters in Turkey battling raging wildfires for the second day in the western province of Izmir. As per officials, blazes in some areas intensified with winds reaching up to 50 kilometers per hour. This forced the evacuation of 4 villages and 2 neighborhoods. Over 1,000 personnel, helicopters, firefighting aircraft and vehicles have been deployed in the region. US President Donald Trump has claimed that he knows a group of very wealthy people who are willing to buy TikTok's American business. He told Fox News that the buyer's identity would be disclosed within 2 weeks and added that the agreement would likely require approval from Chinese President Xi Jinping. Trump had extended the deadline for the TikTok sale 3 times, and now it stands at September 17th. American pharmaceutical firm Moderna has announced that its experiential mRNA-based flu vaccine generated a stronger immune response than the currently available flu shot in a late-stage trial. With the new data, the company now plans to resubmit its application for its flu-COVID combination vaccine and seek approval for the standalone flu shot later this year. Time for a short break, but coming up a week after US President Trump announced a ceasefire between Israel and Iran, tensions in the Middle East remain high. What lies ahead for the region? We discuss this with Navtej Sarna, former Indian ambassador to Israel and the United States. Welcome back. Let's turn our focus to the Middle East, where tensions remain high a week after the US brokered ceasefire between Iran and Israel. Iran has cast doubt on the durability of the truce, warning it's prepared to respond if hostilities resume. Tehran has also called on the United Nations to hold Israel and the US accountable for the recent 12-day conflict. Israeli Prime Minister Benjamin Netanyahu said the Operation Iran has opened broad regional possibilities, while reiterating that securing freedom for hostages remains a top priority. Meanwhile, US President Donald Trump has reaffirmed his commitment to preventing Iran from acquiring nuclear weapons, even as the debate continues over the impact of recent US strikes on Iranian nuclear facilities. Despite Trump's warnings, Iran insists its uranium enrichment will never stop. Its UN envoy called it an inalienable right under the Non-Proliferation Treaty, claiming it's solely for peaceful energy purposes. To decode this, we are joined by Navtej Sarna, former Indian ambassador to the US and Israel. Thank you for being with us, Ambassador. The Iranian government has cast serious doubts in regard to the US brokered ceasefire. They've gone on to say that this may not hold. What's your view? And Iran is also saying that they're going to hit back very strongly if the truce fails. Why do you think Iran is acting in this manner?
Well, I think that should be expected for Iran to react in this manner, because at the moment what is happening is that everybody is claiming victory in the so-called 12-day war. The Iranians have said that they have won the war. The Israelis have said that they have achieved their objectives. And Trump says that the ceasefire is going to hold, and it's, he's done what he's had to do, and it's a great one and done. But the fact remains that we're not sure of anything. We're not sure if the Israeli objectives have been achieved. We're not sure how much damage has been done. And Iran is now beginning to say that, yes, there is damage, but, there is not that much damage. So then the fact that obviously that they are going to continue enrichment. Now, they believe that this enrichment is perfectly legal under the NPT. And if they enrich, the Israeli and the US position is there should be zero enrichment. So no fundamental difference has been resolved conclusively. And now that a pattern has been set, something which had not been done before of bombing of nuclear sites, both by Israel and by the United States, I suppose the Iranians are signaling that this may happen again. And if it happens again, then they are going to react.
Right. We've also seen Iran's top clerics issuing a fatwa against Benjamin Netanyahu and Donald Trump. How do you think both Israel and the United States are going to factor this in while negotiating with Iran now?
Well, I don't think this is going to set the ground for negotiations to begin with. So if you see President Trump's statements today, he says he has nothing to offer to Iran, because there were reports that he was willing to offer $30 billion for a civilian nuclear program. But he says he has nothing to offer. This is an Obama era kind of position. So obviously, I think if the fact that the fatwas have been issued really ups the ante, and it's in response to statements that were made about the possibility of killing or staying away from killing while they could the supreme leader. So this is not a place from which the Iranians can easily walk back and come to the table and start negotiating as if nothing has happened.
Does this mean that the tensions in the Middle East will continue to rise? We were hoping for some peace, but do you think Middle East will remain on the edge and possibly there could be another flare-up?
I think the Middle East has not been heading for any peace. Ever since October 7, 2023, whatever sort of attempts they had of normalizing relations between Israel and other countries, and so on, the Saudi-Iranian agreement and improvement of relations and other things, I think everything is back on the back burner. The fact is that the fundamental problem of Israel-Palestinian issue, the possibility of a Palestinian statehood, the what has happened in 20 months in Gaza, I think that is going to haunt the Middle East for a long time, and it's not going to be possible, as for instance, President Trump had wanted to do in his first term, to brush all this aside and say, okay, we're just going to have peace and everybody's going to behave themselves. I don't think that's on the cards until we address the fundamental issue, and we are very far from that.
Right. Israeli forces have killed 72 people in Gaza, including children, aid seekers. What do you think is Israel's larger objective right now?
Well, it's difficult to say what Israel's objective has been in Gaza for the last 20 months. While the overall objective is eradication of Hamas, what has happened is you've seen the huge amount of civilian deaths, including a large number of children. So I don't know if there is a clear political objective. Of course, Prime Minister Netanyahu, in the wake of the Iranian ceasefire, and he's treating that as a victory, seems to have changed his narrative to say that now he wants to bring the hostages back. And as you know, earlier he said that the main objective were not the hostages, but the Hamas eradication, and that was causing a lot of problems for him within Israel. So now he's changed the narrative that he wants to get the hostages back, and that's going to get the priority. But it's extremely sad the way this is being done. President Trump, of course, now wants a ceasefire in Gaza. But even if that happens now, it's going to be dismally too late and too little.
Right. What do you think is the best card that the United States has in order to get Iran to meet its commitments under the Nuclear Non-Proliferation Treaty?
Well, I think the United States may have already used up that card. Their best card is negotiations. The best card is to talk to Iran and have extensive, these are very complex negotiations. They had negotiated a treaty over 2 years, excruciatingly tortuous negotiations, a 159-page treaty with a lot of annexes, and that was torn up in Trump's first term, and that is Israel's position that the treaty was not good enough. And now to get back to that treaty, there needs to be trust, there needs to be a certain amount of confidence, and there needs to be time. Here they just gave a very unrealistic brief window of 60 days and said, let's do it. And obviously it was not going to happen. And Iranians are not easy negotiators. They're going to stretch it and make sure that they get their right to enrichment. And you're starting with a position of zero enrichment. So the best card is negotiations, and that is the only way you can keep Iran under NPT and get access to IAEA inspectors and so on. But I think after this conflict and the upping of the statements that you have seen and we have referred to on both sides, I think it would be tremendously surprising if suddenly everybody came to the table.
Right. I would like to ask you about the dangers for India. Considering this crisis is not over, there could be another flare-up. How should India secure its interests, considering that we are dependent on the Strait of Hormuz for almost 40% of our energy supplies? We have ties with Israel, we have ties with US, we have ties with Iran. And let's not forget our stakes in the Chabahar port. What are some of the immediate steps that India needs to take to secure its interests?
Well, I think any such disruption that happens in the Middle East or West Asia impacts India directly. It's not something very far away. You have already mentioned Chabahar. There is the North-South Trade Corridor. There are still the nascent ideas of the IMEC and the I2U2. We have 9 million people in the region whose lives and livelihoods are of direct interest to us. And we have our energy needs. Yes, 40% of our oil does come through the Strait of Hormuz. Of course, closure of Strait of Hormuz is a last-ditch desperate effort that Iran might take because it impacts Iran also. Our LNG comes through the Strait of Hormuz from Qatar. So I think any such conflict is of immediate direct impact to us. And we have to actually engage with all the three governments, and we have strategic links with all three. And we have to engage with all of them and to urge the path of diplomacy, dialogue, de-escalation. And we did in the past, but I think we have to do it with all three of them.
Thank you very much, Ambassador Sarna, for joining us. Let's take a look now at what else is trending around the world. Beijing hosts a fully AI-powered humanoid football match featuring 4 teams with no human control or supervision. The robots, equipped with advanced visual sensors, were able to locate the ball and move across the field, but some had to be stretched off by humans after collapsing, while some struggled with basic actions like kicking or avoiding collisions. The event was a preview of China's upcoming World Humanoid Robot Games. F1, the movie, raced to the top of the US and Canadian box office charts this weekend, earning over $55 million. Starring Brad Pitt as a comeback Formula One driver, the film's global total has hit 88 million so far, thanks to fans in Europe and Latin America. F1 is Apple Studios' biggest theatrical debut yet. On Final Cut this evening, Pride parades took place across the globe this weekend as thousands marched in support of LGBTQ+ rights. From New York to Madrid, streets are filled with music, color, and powerful calls for equality as Pride Month comes to an end. Amid the celebrations, many also carried messages of protest, spotlighting ongoing discrimination and rising political pressure against the community in parts of the world. That's all on this edition of Global Lens. Thank you for watching. Goodbye.